Good morning, traders. This is Chris Buss with Traders Profit Compass with a morning look at markets for Thursday, August 27th. Okay, what I'm going to do this morning is look at the daily and 30-minute charts of the indexes, then take a quick look at bonds, gold, and the gold miners. I will follow up this video with a look at some individual names, probably go over FANG again, and I have a bunch of names that may be of interest to you on my watch list, and I'll share those with you this morning. I want to keep this one fairly short. We've got Jerome Powell at 9:10 this morning with I guess what's going to be a consequential speech from the standpoint of at least what the pundits and the so-called experts know. It's above my pay grade, but the Fed is supposedly going to change the way they look at inflation. And since the 80s and Volcker, for the last 40 years, the Fed has been focused on controlling inflation, keeping it knocked down. But now, I think the Fed is more worried about deflation than inflation. And instead of, targeting an inflation rate of, say, 2%, they're talking about changing that wording to average rate of inflation. And what that means is that they'll let the economy run hot and average, from lower levels to come up with an average inflation rate of 2%. So what that could mean is, let's just say we're 0.5% inflation now. So they could let it run, 3.5% or 4% going forward, and then average it back down to 2%. So what that would mean is there would be a period of time when, inflation would be running a lot higher than what we're used to. So that could have major impact, on bonds, on gold, on the equity markets. I mean, really everything. Interest rates flow through the whole economy and into different asset classes. So rather than give you 20 names to look at, let's get through Powell this morning, see where we stand, and then pick it up from there after we see kind of the reactions settle out from the markets. So what I've done here on the SPY Daily, I wanted to give you guys a real clean look at the daily chart. As active traders, we're often, zoomed in on 2-hour, 1-hour, 30-minute charts. But I know a lot of swing traders out there are, trading the daily time frame. And, my charts tend to get messy. So what I've done is strip out a lot of the indicators and all the gaps and everything else to just give you a clean look at where we're at. So here we have an uptrend off of this level in April, and you can see the touches, okay? That's an important line and one to watch if you're bullish, okay? As long as we're in the channel, there's really no longer term implications to any, kind of pullback. We could even, pull back here into the 340 zone, and from a technical standpoint, nothing significant would have happened. Not until we break would there be a significant technical event. And if you notice, I've given you my color coding for my the moving averages that I follow. So we've got the 8-day in pink, the 20-day in blue here coinciding with the trend line, 50 EMA in green, and the 200 in gold. I mean, we could come all the way back and tag the 50 and bounce and go back up. We could even go down to the 200, bounce and go back up, and the overall uptrend would still be intact. Now, if you're long here at 345 or close to 350, you're probably not going to want to sit idly by with a 10% pullback to the 200 just to say, yeah, but we're still in an uptrend. I think you want to be a little bit more active than that. So we're approaching the top of the channel, which comes in around 350, 352, something like that. We should expect some backing and filling or a pullback to the lower side of the channel, because that's what the channels do. They provide support at a certain level, and then a little base will form, and then we'll go back up. And if we break, then we need to sit up taller in our chairs. But I mean, we're above the 8-day. It doesn't get any better than that, okay? There was a post made on a board that I visited, and this guy, whoever he was, said, "Who in the world is buying all-time highs? Like, you're stupid if you do that." And I replied, me, because if it breaks the high, you got to buy. And if you were worried about buying all-time highs, say in the Qs, and we'll look at that in a minute, you would not have been participating in quite a long time. All-time highs are bullish. They're not bearish. So keep that in mind. As long as we drive higher, you can keep buying the all-time highs, but be smart. Keep ratcheting up your stops and know where you're going to exit. You can get bearish in 5 minutes. It's not going to take 2 weeks to figure out that we're pulling back. So keep that in mind. Don't be a guy out there trying to throw darts and pick a top and try to short this market. You may eventually be right, but you may lose a lot of money in the meantime. So stay bullish. Be aware of the top of that channel. Be ready for some consolidation and pullback. So for active traders, we got a great setup here for SPY if you're actively trading it. Yesterday, we carved out a trading range in the back half of the day where 346.50 was support, and it closed near the highs at 347.57. If we break the highs this morning, buy it, move up your stops, move up your strikes, and set yourself a stop right below 347.57, say 347.50 or 25, whatever your risk tolerance is. If we pull back to 346.50 and this trend line, I think you can buy it there as an objective long. But below 346.50, you need to get out of your short-term active trading longs and flip short, because this is an area, a $5 area here. It's not $5. Hold on a second. $3. Excuse me. From 346 to 346.50 down to 343.75, there's really nothing. So I would expect a fast move back down here to back test this 343.75. So this is a real nice, clear setup for you. Of course, we're going to have Jay Powell before the bell, so we could gap higher or we could gap lower, depending on what he says. But these are your objective trading levels for this morning. So same thing on the Qs. Here's our daily channel, very well defined. Touches all along the way have resulted in pullbacks. And now we're making an assault here on the top of the channel again. Right around 297, 298, 300 would be the top of the channel. Of course, we could always break it. but I think your default position is we're going to pull back and consolidate. What would be nice is if we just consolidated along this center line and then, keep working our way back up. But if that center line breaks, you should plan on a move down here to around 285 at the bottom of the channel. And then I would expect a lot of dipsters to step in, at least initially, and bounce it. But if it breaks, we've got a support band here between 275 and 270. That would be a critical location. If we were to break that, then we're looking at a 50 EMA test and then possibly a 200 EMA test. But again, look at our EMAs. We're riding the 8-day. And again, that's as bullish as it gets. All the EMAs are bullishly stacked. Something that would change that is if the 8-day, comes back below the 20, that would be a concerning setup for longer term bulls. 30-minute, again, we got this nice consolidation at the end of the day. Breaks above 292. I think you can buy that. Raise your stops up, raise your strikes up. Keep riding it higher as long as it's going higher. But below that, if it looks like it's, weak or finding resistance there, it would be objective to try a short against 292 and look for a move back to 289.50, where you can flip long or simply wait to see if that breaks. And if it does, we are going to come back and test this gap at 287. And then, of course, if you fill the gap, we go lower. So some real clear levels to shoot against this morning on the 30-minute chart. IWM, it's really not where the action has been. We get this, oh my God, great rotation into value and cyclicals, and then they fade it. And that's what they've been doing here for the last week and a half, 2 weeks. We touched 160. We've been chopping in a $5 range ever since that time, between 160 and 155. 155 is your key level. If we were to break that, I think we're going to come back down and test this 150, which was the original breakout. And if 150 were to break, then that makes all this look like a fake breakout, and then we're coming back down towards 143 down at this open gap. You can see it clearly here on the 30-minute chart. Here was our touch of 160. Spent a lot of time chopping between 158 and 156.50. Once that broke, 156.50 became the resistance line, and you can see that now we've spent about the same amount of time chopping between 155 and 156.50 here. Breaks below 155, favor lower. Breaks above 156.50, favor higher. You're welcome to try and trade this $1.50 range. Fading 156.50 has been working. You can see faded it here and faded it here and got moves back to the bottom of the box. This 155 has held a support, so you can be long against it and look for moves back to the top of the box. Keep doing that until it doesn't work. But if this does break, quickly switch your bias to short and see if we get a move down here to 153 and then possibly down here to the gap. Checking in on bonds. If you remember the last time we looked at bond prices, we were right in this 165 area. I had dropped the Fibonacci retracements and said I favored a move higher, and then a rejection of one of those fib levels, and then resumption of the impulsive down move. That's exactly what happened. This high here corresponds with a 38% fib retracement. Once it hit that level, we moved back down, broke this bear flag, now have dropped below this 165 support level. The projected move brings price way down here into the 159, 158 area. What would invalidate that idea is a break back above 165. If it can do that, you could be long with a stop just below. But everything in this technical structure says lower. Now that we've had the retracement bounce, the bear flag breakdown, I favor lower prices. If you wanted to trade it to the low side, if we got a back touch of this 165 that gets rejected, that would be a great place to anchor a short and look for a move down to 162. If you don't get that, and say we move down here pre-market based on Powell's comments, I would just wait for a break of 162 and then look for a $3 or $4 move lower down to this measured target level. And you can see that below 159, there's not a lot holding it up, so we could come back into the low 150s, and that would be just a phenomenal trade if you were to play that right. So I've got my eye on that. Let's look at gold. This potentially also has a a catalyst in Powell's talks. Yesterday, they tested the low side of this triangle again and got a big bounce. It went from red to green. I think if it can pop 184 and get out of this triangle consolidation, I think it has room to run back up towards 190, 192, the prior highs. But if it were to break down below this 179, 178 area and lose this 50 EMA at 177.50, then I think you're looking at a deeper pullback into the 170 area. So it's at a critical spot. You can see the triangle narrowing. So in the next day or so, it's going to pop one way or another. I would be ready for either one of those moves, because I think whichever way it goes is going to be a nice swing trade. So I would kind of get a game plan together on what you want to do with gold on a breakout or a breakdown. Wrapping up here with miners, it's basically the same setup as gold. Of course, the numbers are different, but we've got a triangle consolidation, pullback after tagging this high at 45. We've come back as low as 39. To my eye, if price can pop 42, then it's got a great chance to go back towards the highs at 45, 46. And if it breaks that, then it's off on another bull leg. If it were to break down below 39, you can see where the 50 EMA is coming in. If price breaks down from this level, then your first target's going to be 37 and most likely a deeper pullback into this mid 35 area. I wanted to make note of the fact that yesterday I saw some pretty significant call sweeps in the gold miners in GDX. Institutions were buying the December 154 calls. They were paying about 125 for those. Bought over 7,000 of those, which is significant. Way out of the money. So on a relative basis, they were taking cheap shots and looking for the miners to make a big leg higher over the next 3 months. So keep that bias in the back of your head. I think that's a supporting factor for this setup if it were to break out. Knowing that some institutions are looking for higher prices. I wouldn't blindly follow it though. I want to see that breakout first. And then this would be something that would give me more confidence in the trade. And as far as trading style, I would never go out that far and that far out of the money. I would go, way closer into the money, if not at the money. I mean, if it's going higher, why not buy 42s at the money for September, October, November? And then if it does go up to 54, great. You can keep rolling all the way up and take advantage of that and book profits as you go. So wait for the breakout, wait for the confirmation, then get long and see where the trade takes you. So we've got Powell this morning. I think we'll know pre-market kind of which way it's going to break. I don't think we need to, blast in there at 9:31 just based on pre-market. Let it settle in. You can certainly, do some active trading if you're sharp based on the levels that we've discussed this morning. But remember, a lot of times on the FOMC stuff, the first move is fake. Keep that in the back of your mind before you go, racing in short or racing in long based on, 20 minutes worth of price action. Be ready for a reversal of the initial move once whatever he says sinks into the market. But I think the market is going to move on this. Which way? I have no idea. So we'll have to wait and see. Okay. I really appreciate your time this morning. I hope you have a good day of trading. Please check out the links over in the show notes for places to check out the blog. I've got a ton of good information there for aspiring traders at all levels, along with a link where you can register for all my content. If you found the video helpful, please hit the like button and subscribe to the channel. I'd love to have you. And every time I post content, you'll be notified and you won't miss a thing. So, this has been Chris Buss with Traders Profit Compass. Have a good day of trading and talk to you soon.